So the president met with Fed Chair Jerome Powell this week. And let's just say things were as cold as ice.
You're as cold as ice. You're willing to sacrifice our love.
Hey guys, it's your favorite mortgage guy, Steve here. It's Friday. That's a cloud hanging over there. It's a big cloud. You know what? I got to tell you, it's end of May. End of May. Can you believe Sunday will be at the half point of the year? Now, here's the other thing. Congratulations to all of you who had college graduates. That's over now. Now you've got, I don't know, elementary school graduating to middle school graduating to high school graduations, and everything in between. You got the camp starting for sports and all that good stuff. So you know what? Just congratulations go all the way around. Let's hand out a trophy to everybody. It's all good. So listen, a couple things. Your questions. I'm going to try to keep the questions to a minimum, but the most important questions that came up this week were, again, how do I come up with a down payment if there's no grant funds available? There's a lot of ways. That's a personal conversation that we need to have. Refinancing, guys, just call me on that. I don't want to give you a blanket answer because refinancing is different for everybody. But again, repeating what I said, I don't care if you got a 2%, 3%, 4%, 5% mortgage. It doesn't matter. We're saving people thousands of dollars a month in cash flow. And just because you have a low payment and a low interest rate and a ton of equity and you got an $800 car payment, et cetera, et cetera, et cetera, let's just get you in there saving some money. So let's talk about some key developments this week in the mortgage industry. And then I'm going to tie a bow around this thing to talk about interest rates. So to start with, what are mortgage rates and what are they trending to do right now? That question comes up every week. Guys, you know damn well rates are not at 5%. They're not at 4%. They're not even at 6%. They're at high sixes, low sevens on conventionals, mid sixes on governments to low sixes. So you just need to know that. Just stop thinking you're going to get a 5% rate or a 6% rate. The question comes up about, should I get an ARM? Well, yeah, go ahead and get an ARM if that's what you want to do. If you really need that ARM to qualify or to have that payment, just go get it. But here's the problem. Most companies are charging at least a discount point, sometimes two for ARMs, because they know they're going to have what's called runoff. What runoff means is that investor wants the return on their investment. They want to know that they're going to get their money. And if rates drop in a year and you can get out of your ARM, they know that's what you're going to do. So just keep it in mind. Now, the housing market, it's experiencing right now a serious imbalance with more than 34% of sellers out there than buyers. So we're starting to see that flip. High mortgage rates, if that's what you want to call them, and elevated home prices are deterring many prospective buyers, leading to an increased price reductions and incentive from sellers. And what that means is we're starting to see people reduce their prices. Now, if you've got a home to sell, you need to call me because I've got a special product that means that you might not have to reduce your price. We could just offer better financing, and there's some benefits with that. So it's called my list and lock. Just call me on that and let's talk about it. But we're seeing sellers pay closing costs right now. We're seeing desperate sellers who took that gamble and bought a house and qualify with both payments, and they didn't sell their house. So call me on that. All right, cold as ice. So this week, President Trump met with Fed Chair Jerome Powell, and he wanted to talk about interest rate reductions to stimulate the housing market. Now, despite inflation dropping 2.3%, the Fed has maintained their rates at between 4.25% and 4.5%. You can't get a rate from the Fed. You can't. That's businesses, that's industries, that's foreign governments. Now, one of the things that's important right now is that cold as ice thing is that Jerome Powell appeared to not want to hear what the president said. We'll know in a couple of weeks what this is going to look like. They're going to give us their mandates and they're going to give us some direction. Now, you've also heard a bunch of news out there about Fannie Mae and Freddie Mac going to a private partner to becoming private companies instead of a public-private partnership. Now, they have partnered with Palantir to launch a crime detection unit. Last week, I talked to you about mortgage fraud and how rampant it was. And it's aimed at combating that. And they're going to use AI for that. The cool part about AI, I love it. I just love AI. I think it's great. It helps me with memos. It helps me with a lot of different things. It's helping the college students, but we can't run the risk of it taking over the industry. So that's going to come in and try to help combat fraud. And the cool part about it is if you're like me, you've gotten phone calls from your credit card companies asking, hey, did you charge this while in Timbuktu? No, I didn't. Their AI fraud tool picked it up. All right, so now let's talk about some lending in wildfire zones. Here's the funny part. There is no comedy about it, but the funny part is traditional banks are now hesitant to approve mortgage loans in these wildfire zones. Doesn't necessarily have to be California. It could be any place there's a wildfire. So companies like mine who aren't as risk averse are willing to do that. Now, what's the industry outlook looking like right now? So the projections are that interest rates, projections, interest rates. This is Fannie Freddie, the mortgage regulators. They're thinking rates are going to consistently stay where they are temporarily. I've been telling you this. Don't buy the rate. Buy the house, not the rate. And if one of the cool things is if you're putting 20% down, we let you manage your own escrow account. So you can have that low payment, pay your taxes twice a year, pay your insurance once a year. Here's the other thing. It helps me tailor the loan to your needs because I know nobody wants the highest payment. Nobody wants the highest rate. I get it. But I'm your favorite mortgage guy, and that's what I'm here to do. The most important part about this interest rates. I just told you high sixes, low sevens on conventionals. Governments, low sixes, mid sixes. Can't do anything about rates. I can't do anything about it. I'm not the Federal Reserve. Buy the house, not the rate. Buy the equity that you're going to increase. Now, if you got a house to sell, remember, call me, talk to me about it. A pre approved buyer is better than a pre qualified buyer. Pre approved means Steve says you're going to get the loan. A pre qualified buyer is Steve thinks you might get the loan based upon whatever you told him that he couldn't verify because you wouldn't let him, including a credit report. Most cases, I'm not even pulling a hard copy credit report, so I'm not going to have your credit score impacted. I'm pulling a soft check so that I can at least see what your scores are. Guys, call me over the weekend. Welcome to June. I need your referrals. It's been a little slow. You heard me say that every week for the past couple weeks. It's been slower than normal. Send me your referrals. I'm happy to help. Have a phenomenal weekend. Congratulations to you and your graduates.
You're as cold